Hello and welcome. You're watching us here on Chartbusters. We kickstart a new series. It is the March series. A lot at stake after a 3 series loss. Almost 1,000 points eroded, Nigel, in the last 3 series. Bulls are wondering whether they can march forward.
Well, that's right, Mangalam. Let's see whether or not there's a bit of a relief. For the time being, though, it's clearly looking a little bit jittery, right? The Nifty bank is struggling to find its own. So let's see whether or not we see some bit of relief.
All right, let's do that. But before all of that, let's also get in our first management on the show. Sachit Jain, who's the Vice Chairman and Managing Director of Vardhaman Special Steels, joins in to discuss the outlook for their business going ahead. Sachit, always a pleasure speaking with you. Before we talk about business as it is currently, just wanted to know about your negotiations with auto clients. Usually, every time we speak with you, you're in negotiations with them. What is, it that you're demanding right now? What is it that's likely to be offered? Can you give us a sense?
You're right. This is something which is a problematic situation. We are always negotiating. Most of the negotiations are over now. We were asking for an increase in price. The OEs were asking for a reduction in price. And finally, with most of the OEs, we have settled at 1750 rupees per ton reduction in H2.
All right.
So that has happened.
Hi, Sachit. Good morning. Always good speaking to you. 1,750 rupees, that's not too big a cut. Some on the street were expecting a bigger one. And the 1,750 is for the second half of the year?
Yes, that's right.
Okay, all right. Interesting then. So, that could put some kind of pressure though on the EBITDA per ton front, but we'll get to that in just a bit. Let's focus on demand first. There are various pockets of weakness that we're seeing all across the country. What capacity utilization levels are you functioning at? And in the first 9 months, you've done very well in terms of total tonnage. What do you end this year with in terms of sales volumes?
So as of now, we are running at near full capacity utilizations, and we should end the year at between 195 and 200,000 tons. So last year was 173,000 tons. We've had a good growth this year. We were lucky.
What do you say? You end this year with what number?
Around 195 to 200.
Okay, all right.
Of course, 200 is a double century, and 197 is still a century. So,
so we'll keep it. We'll keep it at 195 to around 200,000 odd. My team will just fix that audio. So, Mangalam, we've got a couple of details out there. For the second half of the year, the 6-month contract, well, that's been revised down by close to around 1,750 odd. And, it should be actually an industry-wide thing as well. So we'll have to keep an eye out on that point, number one. And the second factor is functioning at optimum utilization level. So 195,000 to around 200,000 odd. That's par for the course. So that's a pretty good year is what we've seen.
And while the audio is fixed, it'll also be important to see that with this 1,750 per ton sort of reduction, what happens to his EBITDA? Because the third quarter EBITDA per ton, like you've pointed out, is close to around 10,731. If you calculate it, it's sub 7,900. How much does it fall further? What happens is something that we will pose the questions to Sachit all about. I think the audio is fixed, and we'll just go back to Sachit. Also, electric vehicles is something that we'll have to ask him too. About 5 to 6% of his sales come in from there. So let's see how that vertical pans out. Meanwhile, we do have some update coming for you at the bottom of your screen. This is with regards to Z. The Z IndusInd case, that is. The NCLAT hearing in the case will begin shortly. Remember, this is par for course. We had alluded yesterday after the possibility of, after Z was, called into the NCLT, that the possibility of them going ahead and appealing to the NCLT will take place. That happened, and now the NCLT hearing is back. We do have with us Sachit once again, and hopefully with better audio. Sachit, we understood that you will do about 195 to 200,000 tons this year. There has been a price cut of 1,750 per ton. What does that do to your EBITDA per ton for the second half of this year? And more importantly, FY24, what are you factoring in?
So we are sticking with our targets of 7,000 to 10,000 rupees EBITDA per ton. And next year also will remain at that level. Okay. As we have said, that from 24, 25 onwards, we'll be targeting for higher numbers, but we are not ready to give an assurance. But our target will be 10 to 12,000. But as of now, our targets, we will remain 7 to 10.
Sachit, just to drive home that point, your calculation is 7 to 10,000 rupees, but you're considering the other income in this calculation, right?
Other income has two parts. One is past other income related to past years, and the second is other income which will continue. So this other income is going to continue. What has been declared this year, except for third quarter, has first 2 quarters part of other income also. So third quarter number is not repeatable, but the 9 months, if you look at the other income spread over 3 quarters, that is sustainable for the next 7 to 10 years.
But Sachit, some part of the street believes you shouldn't be including this in your calculation.
That's up to the market. That's up to the market.
But you're considering it as an operational income, this other income.
Yes, because this is part of the incentives for which we had put in the plant out here.
Okay, all right.
Part of it is electricity duty and part of it is GST refund.
So fair enough then. Okay, all right. So that's why you're holding on to that number. Let's focus on the volumes a little bit more. Aichi, your partner, they had to take some offtake in FY23, though the big tailwind will come in 24 and 25. So how much have they taken in this year? By the end of this year, what is that number? And how does that ramp up? How does that ramp up? That's point number one. And EV as a percentage of your sales volume is how much?
So still this is sub 10,000, so it is still a small number. As I said earlier, it's slowly going to go up. Next year will be a little bit higher. And really from 24-25, where we'll be targeting 20 to 25,000 tons, is when we should take those numbers seriously.
This is Aichi's numbers.
Correct.
All right. And EVs, what happens to that? 5.5 to 6% of your FY22 sales was to EV. And is there a difference in realizations between what you supply to EVs and non-EVs?
We don't declare that separately, and we will be around 5% even this year. The non-EV sales have done better. So as a proportion, the EV sales have gone down a bit.
All right. And on Aichi itself, I remember earlier you had said that they could take almost 30 to 50,000 tons. But now you're saying by 25, they'll only take about 25 to 30,000 tons, and it is growing gradually. Will they pump in more money in the company? It's about 11.4% stake that they have. At any point, will they look to increase it?
Yes. So as per our understanding, they will at some time increase the stake to a reasonable amount, and that should happen anywhere in the next 2 to 3 years.
Next 2 to 3 years. Any idea how much do they want of the company? Will it be a fresh issue, or will Mr. Jain and his family be giving them some stake?
No, Vardhaman Group and me personally are not going to dilute our shares.
Right.
And any increase in stake for Aichi will be additional capital into the company.
Okay.
The company today doesn't need any capital, but the very fact that Aichi would invest in our company would be positive, I believe, in our customer mix.
What stake would they like to hold? I mean, they already have a board seat. Do you think they want to take it from this 11% or to 20%?
The whole idea will be somewhere between 20 to 25%.
All right. And that happens in the next 2 to 3 years itself, or is there any other defined timeline?
No, it should happen in the next 2 to 3 years, but those are things that will be discussed as time progresses.
And the valuation parameters will also be discussed then, or do you have them in place right now?
No. Being a public listed company, it has to be linked to the market price at that point in time.
Okay, all right. Let's focus on how is your balance sheet looking? What is the updated debt number that you have? And what's the capex plan you have? You have the ambitious plans of increasing your rolling capacity. Run us through those details: debt, capex, and what does your capacity go to?
So debt is roughly 180 crores as of 31st December. It'll drop a bit by 31st March. And we have a plan to invest about 250 crore rupees as already announced. But we might need more land to put up covered warehouses for our exports. So we might invest a little bit more on land. So that may increase the capex a bit more because land is expensive in this focal point area.
By how much can that increase?
Maybe it'll go to between 275 to 300 crores.
All right, 275 to 300 crores. And what about the forward integration of Vardhaman Special Steels into a forging plant? I mean, you have been talking about this EBITDA per ton range of 7,000 to 10,000. This forward integration should improve your operational performance, right?
Those, again, still are some time off. Those are discussions. You see, please understand that with a Japanese company like Aichi, we gave a directional idea and then gradually we discussed those plans through. So nothing immediately in the offing, but over the next 7 to 10 years, this would happen.
Okay, all right. Final question then, before we let you go. There's been a lot of focus, the company to move towards to moving on the carbon footprint part of it. Tell us, what measures are you taking since you have Aichi on board?
So thanks for asking this question, because this is an important area. Normally, post the blast furnace route, the carbon footprint is between 2.5 to 3 tons per ton of steel. In our case, we are at about 0.9, scope 1 and scope 2. And over the next 5 to 10 years, we bring it down to 0.5. And then our target is to bring it down to 0 by 2050, ahead of the Government of India's targets, but coinciding with Aichi's targets and Japan's targets of 2050.
All right, Sachin, thanks a lot for that. In fact, not for anything else, but the fact that you will bring the carbon footprint down to 0, that, irrespective of its impact on the investors, will be great for the environment as a whole. Pleasure speaking with you. With that, we step into a short break. But as we do that, the latest from the corporate world. Let's get you. EY honored the best business leaders at their annual Entrepreneur of the Year awards last night, and JSW Group's Sajan Jindal was named the EY Entrepreneur of the Year.
Welcome back. Well, the markets have come off a little bit from the top, and the naughty guy yet again is the Nifty Bank. That's moved into the red. So just keep an eye out on that one. That's the disappointing one. Let's get in Manas Jaiswal. Manas, where does this stop? What's the support level you're looking at on the Nifty? And closer around 17,515. Would you look to buy, or do you believe we're going to head down?
Good morning, Nigel. So I think the trend is definitely negative. We have seen some bounce back, but again, Nifty and Bank Nifty both are facing resistance on higher levels. I believe that Nifty can go down and test its budget day low, that is 17,350. So I think even from current levels, you can see almost 175 to 200 points cracked in Nifty, and even Bank Nifty is looking weak, and I believe that Bank Nifty can go down and test 39,000. So here also you can see almost 1,000 points crack in Bank Nifty also.
Right, not mincing your words out there. Budget day low of 17,350 and the Nifty Bank at 39,000 would also coincide with their 200-day moving averages. So let's see whether that acts as a spot or not. Manas, individual stocks, what do you have on your list?
So first one is a sell call on Apollo Tyres, Mangalam, because here stock has broken the support of 324. It is trading below 50-day moving average. I think Apollo Tyres can go down and test 305. So take a short call here. Stop loss should be around 325. And second is a sell call on SDFC Limited, where stock is facing resistance on high levels. Now stock is trading below 100-day moving average. Here one can create short position. Stop loss should be around 25.98 and target would be around 25.50.
All right, Manas, thanks a lot for that, giving us your calls on the index and individual stocks. But, invariably we end up speaking on Friday, and you have a very serious look on Friday. We don't know why. If you just take a look at what's behind Manas's desk, it's got MJ written. It stands for Manas Jaiswal. But Manas, are you also a fan of Michael Jackson? Oh,
he's left.
Maybe he's moonwalked out of the...
I think he knew it was coming. Okay, all right. Well, it's a good time then to shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Anubhav Sahu of moneycontrol.com joins us to talk about a stock that is tracking closely. Anubhav?
Thanks. We would like to bring investors' attention to Aarti Industries, which is the leading manufacturer in the benzene-based value chain. Now, in the quarter gone by, sequentially speaking, top-line growth was flattish, wherein traction for newly added capacities was partly offset by lower pricing. Management continues to see weak traction for dyes and pigments, demand from the textile industry. Except for that, demand environment is largely stable. We notice better than expected demand trends in advanced economies, which augurs well for the chemical industry. Among the positives for the business in recent quarters have been the reduction in raw material sourcing risk due to long-term contract with Deepak Fertilizers and the reopening of China's economy. Now, in this context, stable margins reported by company are comforting. However, material change in EBITDA margins would happen after fiscal 25 when the new set of downstream products are rolled out. At the same time, long-term thesis is intact. company benefits from both import substitution and China plus trends. Capex cycle for the next 2 years is also promising as it can add 40 plus products for specialty chemicals. For the stock has corrected significantly and now trades at near 15 times fiscal 24 EV by EBITDA. As there are risks related to demand moderation, long-term investors should accumulate the stock in a staggered way.
All right, Anubhav, thanks a lot for that. With that, we'll slip to a short break, come back on the other side. We have, he's come off the highs. The mid-cap index is doing well, but despite the mid-cap index doing well, we have one stock which is selling inexplicably. It rose inexplicably as well a couple of days ago. That was IRB Infra, went ex-split, had a solid rally, but from then it has seen a bit of a dip. In fact, in yesterday's trading session, down double digits, and as we speak, down almost 4%. So in today's move, it's eroded all the early weekly gains as well, and now down about 1% for this week. So we'll keep an eye out on this stock and the others as well. But let's get you some latest coming in from the corporate world. EY has honored the best business leaders at their annual Entrepreneur of the Year Awards. KP Singh, who's the chairman emeritus of DLF India, won the Lifetime Achievement Award at the event. Shireen Bhan spoke to him.
At least future generations, back to ऐसे but they will be at least able to get infrastructure and they will be commensurate with the projected growth of 5 trillion. Otherwise, they will be lopsided.
Yeah.
So I'm, with my experience, and I'm taken up this subject and said everywhere, that please do that. And secondly, you need new cities. As you say, McKinsey have projected Chicago, and new cities cannot come. No new Gurgaon can come, because when you see what happened to how I purchased the land integrated, it's mind-boggling. It took me 15 years. I used to be with every farmer. What all I did.
Driving around.
No, I will be with them, eat with them, or all arranging everything. Nobody can do it. It's impossible. So therefore, what happens is, Nevada is a good example, where government acquires the land, auctions it out to a private sector. The development should be done by private sector only. So the government should acquire.
But the acquisition should be done by the government.
Yeah, and I believe, I'm told, I was wanting to check, that in the land acquisition law, whereas this present government, about 7-8 years back, had brought this amendment and included the land acquisition for township.
That's right.
But that was deleted. Now you can acquire land for highways, infrastructure, but not for township. So if you don't, if government is not empowered, how do you make it a township?
Yeah.
So there will be no township unless government is fully empowered to acquire land, auction it out. Private sector, you cannot make it. But development of townships should be done by private sector.
Well, remember, you can catch excerpts of this